Hey everybody, Jimmy and Bill. Hope you guys are having a great day. So today what we're talking about is affordability. And as you know, the average person can't really buy a house. So I'm gonna tell you a little story about a couple that I met, and they thought they had it all figured out. And I'm gonna tell you at the end of this video what you could do to avoid these problems. But let's get started. Let me tell you a little bit about the story. In the meantime, if you like the content that we create, if you could do me a favor, if you could subscribe and like the video, it's greatly appreciated. So let's get started. So basically I met a couple and they wanted to buy a house, and they were near my neighborhood. And they had $100,000 to put down. Great, right?
Right, yep.
$100,000 they're putting down. So they're looking at a house for $500,000. And they were qualified to take out a $400,000 mortgage.
Okay.
They're both working, making good money.
Okay.
So they got into the house, and I wrote down some rough numbers, so I'm going to be looking at them. So basically, from talking to them, they put 20% down. Their mortgage payments were roughly $2,500, $2,530. They said they got a rate about 6.5%.
Okay.
Now their taxes, they said they're going to come out to about $6,000.
Okay.
For that amount. Does that sound right?
Sounds about right.
So that's $500 a month. Then they said that their insurance, and I asked them about these numbers, and then we went over some bills that I pay for certain things. Their insurance quote came in around $5,000, which is another about $416 a month.
Yep. Okay.
So their electric costs, and they haven't been in the house that long. Their electric costs, I told them it's probably going to run, because they have a pool, I have a pool, I pay about $400, $450 a month. So I put down $400 for the electric. My water bill, since they're on the same system, about $180 a month I pay. So they're going to be paying $180 a month.
Okay.
Now these are just fixed costs.
Yeah.
Cable and internet, $225. That's how expensive it is, pretty much. And that's what it comes out to. For cable and internet, yeah, it's expensive. I pay about $225 a month. Oof. My lawn care, I used to pay $50. Now I'm paying $75.
Yep.
So it's crazy. Maintenance, okay, let's talk about maintenance. You're like, well, you know, nothing happens. Something's always happening to a house. I don't care if it's new, or if you want to buy something, or a piece of furniture, or something breaks.
Yep. There's always something.
There's always something. $6,000 a year. So say $500 a month, no matter what. You can
no, that's not broken. That's just maintenance, upkeep,
yeah,
and stuff like that. Okay.
You know, maybe the water heater, it averages out. Maybe you don't spend that $500 for 3 months, and then the fourth month you're spending $1,500.
Right. Like our dishwasher just went out. So.
Yep. Their HOA fees, they said it'd be about $350.
Okay.
So their total monthly to live in that house is $5,174.
Yeah, when you put it on paper, it's
that's how much it cost for them to live in that house. So we sat down, we were talking, that's $62,000 a year.
Right.
And
just to live.
Just to live. That comes out to $172 a day to live in that house.
Yep.
Okay. So they're like, yeah, we didn't realize it. We wanted to buy some furniture. You know, the credit cards were there and things were struggling. But we think we could afford it. Now, 40% of their income goes towards housing, the stuff that I just talked about. Okay?
Okay.
And I did some research, and they said it should be around 30%, you know, as a good cushion.
Yep.
But they both work, making good money, and, you know, probably six figures, you know, 120,000, 150,000.
Okay.
But in order to pay that much, you really need to be making around 200,000.
Okay. Yep.
So 30% of 200,000 would be enough to be at the 30% mark. Everything's fine. They were struggling. They were worried. She just lost her job.
Oh God.
And the field she's in is really, really hard.
Okay.
So, you know, we were hanging out, we were talking, and we kind of redid the numbers because they're going to have to sell the house.
Ooh.
Because if she can't find a job and he can't use 75% of his income, they have kids, they have everything.
Right.
So we figured out that even when they sell the house, you know, they're lucky if they break even.
Right. They just moved in, right?
Because they just moved in, yeah.
Okay.
If they sell the house that they could afford is $250,000. That's what it comes down to, from a $500,000 house to a $250,000 house.
Right. Okay.
So my question to you, what could you get around Tampa Bay? And this is probably, you guys could consider this other parts of the country too, because you probably know your market better, but Bill's gonna talk about Tampa Bay because that's what he knows about. What could you get for $250,000 for a family of 4?
Well, sounds like number one, you're gonna have to downsize tremendously square footage wise.
Right.
So in your neighborhood, everything's about 2,500 square feet or so.
Yeah,
give
on
or
average,
take.
yeah.
So if you're looking at 250, depending on where you're gonna go, you could go with a townhouse.
Yeah.
Potentially, you know, a smaller 1,550 square foot townhouse
Right.
would be number one. You could look at a typical residential house on that same size, 1,200 to 1,500 square foot.
But not in that neighborhood. Because
Not in that neighborhood. Well, they don't even make those in that neighborhood.
Yeah.
You know, and specifically in that neighborhood.
Right.
Now, there's some communities around that area that do have like smaller villas. Could be an option.
Yep.
You know, but 250 is a tough price point. You know, you could go into like the Hudson or Holiday area.
Yeah.
And hit those price points.
Which is more north, further
Yeah.
away from Tampa. So if you guys don't know, it's further away from Tampa.
Right. Yep. Very, very valid point. And then, but at those, you know, those are older homes.
Right.
You know, you're talking about you're getting into homes that were built, you know, in the 60s. And they may need a little bit of work. They may not. It just kind of depends on the property that you find. But people have gone in there and renovated some, even still at the 250 price point. And they, you know, they're there. That's what's there.
Right.
So
basically,
they are affordable. That's where people, the affordability right now with everything is there.
But that's the whole thing is, so now they have to go down to a townhouse or a much smaller house
Yep.
in a different area, in a different school district,
Yep.
in order for them, you know, in order for them to afford it.
Right.
So my point about this, what I want to try to get out on this video, what I want to tell people is, if you're relying on 2 incomes, this is my opinion again, if you're relying on 2 incomes to pay the mortgage, that's not smart. I'll just be honest. I think you should buy a house that if either one of you, if it's 2 incomes supporting that house, I know there's a lot of people that are single, own their own house, and this doesn't apply. But you should buy a house that you can afford on one of the incomes. You need a cushion. Why are so many people buying houses without living on the edge?
Right. It's so, you know, I get it. This kind of goes back to one of our other videos where we talked about rent versus buy.
Right.
You know, in that situation, you don't want to throw, you know, I understand how people don't want to throw their money away when it comes to purchase, you know, like because they're renting and they'd rather purchase, right?
Right, and these people thought they did it right. They got $100,000 down.
Yeah,
they got 20%.
It's a good amount down. Good, they don't have to pay, you know, PMI or any of that. So I get it. You know, it's a tough situation. You know, they say you should have what, 3 months? The recommended 3 months to survive in your bank account.
Well, some banks,
here.
Yeah, some banks require that, and they probably had it, but then they're like, well, we need furniture for this room, because you know this house was a lot bigger house than what they lived in previously.
Right, and that's hard. You know, you're trying to furnish it and fill it up and do all the stuff that's exciting and fun that you should be able to do when you buy a house. There's nothing wrong with that at all. You just have to stay, you know, if the unthinkable happened, which it did, and that's horrible.
So if the employment market goes south, this is going to be a common story.
Potentially.
So people, you know, what I'm saying basically, in my opinion, during the pandemic, everybody was trying to upgrade houses to have a home office, more room, and everything. I think the opposite could happen. I think people are going to be getting rid of the big houses that aren't affordable.
And now going to a downsizer?
Going down to something more affordable.
Yeah.
What do you think?
Well, That's just assuming that the market goes under. I mean, that's kind of what we're talking about as far as...
No, I'm talking about employment going under.
Right, okay, so the employment market going under.
Yeah, so people are getting laid off.
People are gonna get laid off. I mean, we know that's coming, unfortunately, and it's horrible. Hopefully this doesn't happen. Obviously, this is all speculation.
Right, if we go into a recession, some people say we're already in a recession, but who knows?
Here's my take on that.
Go ahead.
We don't know what's gonna happen.
Right.
Right? So, better plan ahead. You don't know, hey, my job's solid. We don't know, right? Like, that's what you're thinking in your head.
Right.
Maybe you work for the city, maybe you work for the government, whatever, private enterprise. You think you got a solid job, you've been there for 15 years. You don't know what's gonna happen.
Right.
So, the point is, if you think the storm is coming, start saving now.
Yeah.
Even worst case scenario, let's say you save a whole bunch of money into the bank account, into your savings account.
Right.
That's not a bad thing.
No.
Cut back on your Starbucks, cut back on the little things. You don't, when you sit down, I didn't realize how much money you spend on little tiny things.
Oh yeah, everything adds up like crazy.
$7.50 for this, $8 for that, $10 for this, $12 for that.
Right.
You know, you don't know how much that's actually gonna cost you in the long run. And by the end of the day, you've saved $300 a month just on those couple of tiny expenses not spending. I'm not saying you don't get to treat yourself, but you know, we went on vacation and instead of making coffee, I decided to walk across the street to the Dunkin' Donuts every day and get my coffee and a bagel, and that was like $7.95. And then I look at my card statement, I was like, what did I spend all this money on?
Right. So, you know, like, I think, you know, I'm not trying to be doom and gloom and at all, but I'm just saying is stuff happens.
Right.
And if you're like, yeah, we both have to be working, we both have to be making X amount of dollars to afford a mortgage.
Yep.
Even if the bank gives you the money, don't buy that house.
Yeah, you don't have to spend all the money you're given.
Look at these people, what happened to them. Now they have to sell. They've been in the house, I think they said 90 days. Oh, I don't even think the new tax bill came out.
Ouch.
She lost her job 45 days after they moved in.
Oh my gosh, that's horrible.
And their plan was that her income, all of it, would go towards the mortgage.
Right, makes sense.
And his income would go cover everything else.
Which is the logical plan, and it makes perfect sense.
But it didn't work out that way.
Yeah, that's hard. That's super unfortunate. Hopefully she lands on her feet and gets a job.
This video is about affordability. So what Bill was talking about is, and we did another video on this too, just at the end of this video, just look at the videos. I'll put some videos towards the end so you could see them. Affordability, condo, townhouse. If you have to drive an extra 25 minutes to get to your location, but you're saving a couple of $100,000.
Right.
You have to do it.
Right, it's not the end all be all. You can sell that house again, you know, in 5 or 6 years. And hopefully you've gained some equity and you can move up to the next. You can step up again to that next one. Maybe you're more established, you've got a bigger cushion in the bank, you know, you're making more money, you know, just on your job in general.
Or if you have to rent for a little longer.
Or you rent for a little longer, it's not the end of the world.
But the whole thing is, just because you could afford a house that's $500,000, $600,000, $700,000, and the bank's willing to give you the money for the loan on it,
right,
based on both incomes, that's kind of a gamble.
Right, it is a little bit, and you just don't know. You don't know. It doesn't have to be, oh, my job's solid. What happens if you get in a car accident? You didn't know. It's not your fault. It doesn't have to be your fault. You just have to have a backup plan. That's it. That's all I'm saying, have a backup plan. Oops, sorry.
Yeah, so anyways, that was today's video. The point again is, buy something that you guys, if you're married or just living together, or it's two incomes to afford to buy this house, buy something that one of you could pay for everything and use the other income like a cushion. If nobody gets laid off, wonderful.
Exactly.
But if somebody gets laid off, you never base it on both incomes. That's today's video. Do me a favor, Please subscribe if you like these kind of videos. There's more to come. And hit the bell notification and watch the next video. It's going to be either here or there. I'm not really sure. but I'll talk to you soon. All right, thank you.
Bye.
Bye.